You are listening to chartingwealth.com for Wednesday, the 20th of January, 2016. We always start with IYY, and what do we see? More down movement. We're literally going into our sixth down candle for the markets. Lots and lots of down movement since the beginning of the year, but pay attention to our charts, we actually foretold this all the way back on the 4th of December when the charts rolled over on our 2-day chart and never went back up. So we've been in confirmed down moves since then. Now, if we revert back over, and again, we're talking about the total market to begin with, we look at a shorter chart. That is the 4-hour or half-day chart. If you go all the way back to the 4th, you can see where our chart rotated over on the short chart around the 2nd. That was too early to catch that movement on the big chart, but the chart did move back up and then back down, back up and down again, and continued to make major movements down since the last crossover on the 4th, which is when everything rolled over hard, but it was already there for us. We're well below our 2-day trend line. What happened throughout the course of the day on Tuesday? Well, it was basically sideways sliding. It was down 0.01%, 1/10 of 1%, but really was a sideways slide. Are we getting a bit of a bottom here? Well, hard to tell. Still in a firm down move on the big chart, but could be getting a little bit of a bottom. When we see our charts cross over and start to move up, that'll get us excited. Either the markets are bottoming out or they're simply digesting and will roll back over again, and we'll jump in to catch that movement if you missed it on the 4th of January for more down move. Let's just keep our eyes open. Now, what do we see when we go back to our 2-day chart and take a look at SPY? It was technically up 1/10 of 1%. And you know, the total market was down 1/100th of 1%. Sorry, I said a tenth. The SPY, Standard & Poor 500, is represented by SPY, was technically up 0.11%. Didn't count for squat. And what do we see? 6 down candles on our 2-day chart, again, rotated over going down, just like the IYY did. The Standard & Poor 500 rotated over going down around the 2nd, the 4th of December. Now, if we drop back and take a look at our 4-hour chart, our half-day chart, we can see how the market has been sliding sideways for the last day and a half or so. Actually bottomed out almost for the last 2 days, really, about that same area around 187.24, 25. So we're waiting to see if we get a crossover going up. If that indeed occurs, that might be setting us up for an actual ability to get into a down move once it rotates back over. We're still on our, well below our 2-day trend line, which is shown on our charts by a dark blue line, our trend line. We always use our trend lines on the large chart so we can see when those get violated on the small chart, which can also give us a good idea as to when we might want to think about getting in a potential move. Now, let's look at our last of our indexes. We're going to go back to our 2-day chart, go to the Qs, which is, of course, the NASDAQ 100, and we see that it really has moved up. Actually, the market opened higher than our trend line, so it really violated that. So if we reset it to the 2-day candle back on the 15th, we have a good trend line again, connecting 1, 2, 3, 4, 5 maybe, almost 5 of the 6 candles. Again, moved over going down back around the 30th of November. So again, this wasn't a new move coming. This huge down move was, but the market had already crossed over going down. It really slid sideways, down moves in the meantime, but slid sideways till the 1st of the year, actually the 4th, the first trading day, the 4th of January. If we drop back and look at our 4-hour chart, what do we see? Well, we see the crossover going down there the afternoon of the 31st. Major down moves since then. Still waiting to see if we're going to get a crossover going up, or we might see something offer an ability to get into a move. Now, let's lastly go to our 2-day chart on gold. What do we see there? Well, gold crossed over going up around the 16th of December, really tracked sideways and down a little bit, and then really started shooting at the beginning of the year. Since then, it's been sliding sideways. Still in a confirmed up move on gold on the big chart, derivative oscillator losing its steam. We broke our 2-day trend line and haven't had another trend line set up yet, except perhaps a down moving trend line, which would have been violated over the course of the trading on Tuesday. But if we look at the 4-hour chart, what do we see? Well, the 4-hour chart actually crossed over going down back on the 12th. If we see a move of the market back up, it would parallel, of course, the 2-day chart and might get us into a position on going long on gold, but gold has just been sliding sideways since sometime around the 12th, afternoon of the 12th. It's gone down some, but mostly sideways sliding. In fact, it's not gone above its high point on the 13th. So let's that, and that is the 13th of January. That is where we are in the markets as we find ourselves ending the day on a Tuesday, getting ready to go into a Wednesday. Pay attention. If you haven't listened to our weekly review and forecast, please make sure you do that so you know what events will be in the news throughout the course of this week, things you might want to pay attention to. Appreciate you being with us every day. If you have any questions, we'd love to hear from you. You can follow us on Facebook, Twitter, of course, Instagram and YouTube. And if you haven't already signed up for our daily newsletter and our weekly review and forecast, you need to do that. Easy to do. Just go to chartingwealth.com. You'll also receive our charting layout at freestockcharts.com for free, our layout with all of our indicators and the way we have our charts set up. And you'll also receive how to read a stock chart video, the link to that. Let us hear from you. We want to do everything we can to make you a better investor, someone who can read a stock chart and can actually do this on your own. Thank you so much for listening from chartingwealth.com.